Hey everyone, today on the show we have with us Dr. Jeff Anzalone, who is an expert in helping doctors, dentists, and other high-earning professionals learn how to invest their money in real estate. And I'm very happy to have you today, Jeff, and welcome to the show.
Appreciate it. Honored to be here.
So, uh, without going into your backstory yet, believe me, we'll dig in there. Just tell people what it is that you do right now.
Well, I'm a periodontist by trade, but I also invest in syndications. Mainly, my job is to raise capital, and we're buying typically RV parks, but also mobile home parks too.
And you are not raising capital for like a variety of sponsors. You're responsible for you are part of it. You're a partner in a business that buys mobile home parks and RV parks, and you're on the capital side of that business. That's right.
That is correct. Yep.
So that kind of begs the question, well, how does a periodontist get into raising capital for a business that buys RV parks and mobile home parks?
Yeah, we may be here a minute for that story.
That's all right. We're all about the story here.
Okay.
So take it away.
So when I 2 weeks before I got out of my residency, I'm from Louisiana, and I was supposed to come back here, my hometown, to join a group practice.
Where's that? I'm sorry.
Monroe, Louisiana,
Okay.
kind of in between Shreveport and Jackson, Mississippi on I-20. So, to not to get into too many details, the group that I was supposed to join was having some internal issues. So they decided to pull the deal out from under me 2 weeks before I finished. Well, if you know anything about dental school or medical school, they're not too business savvy. They don't teach us anything about business. So I had $300,000 in student loans. We had a 2-month old. I'd already bought a home here, interest only, because I knew a friend of mine's dad was a banker, and he said, "Oh, I know, you'll make plenty of money. You're going in that group. I know them. We'll work it out." This was for the '08 crash.
Mm.
So, so you can imagine my situation there. Like, I'm like, what am I going to do? I mean, like, I don't know how to start a practice. I don't know how to do anything. And that really set me back, like mentally, like into scarcity mode, like survival mode, so to speak. So, luckily, someone heard about my situation, another dental specialist, and he said, "Look, you can come rent from me. I'll kind of teach you the ropes. I kind of help you network." So he did, and I was very lucky and thankful that he did that, and I did that for 2 years. But he knew that I didn't want to stay there. I wanted to open my own practice, but I was learning pretty much everything that they didn't teach me in dental school, and I actually had I like these these yellow. I don't know if you can see it, or you probably can't see. Yeah, the yellow notepads or
Yeah.
tote
When I was a
pads.
lawyer, I used a lot of yellow notepads. It was my life for a long time.
Yeah. So I was constantly writing stuff down all the time. And then when I got ready to buy my own building to start my own practice, I kind of looked at my notes and I was like, man, this is like a book. I said, why don't I just self-publish it, the book? So I wound up doing that, and it was called What They Don't Teach You in Dental School. Pretty self-explanatory, very
Mm.
basic, but it still sells to this day, after almost 20 years. And not a whole lot, but I figured that people, if you have something and you go through some sort of trial or tribulation, you can probably help somebody out by sharing your experience, and that's what I did. So during that time, I back then there wasn't all these different financial gurus. The main one was Dave Ramsey. You've probably heard of him.
Sure.
Um, the I went through the debt snowball. You pay off your smallest debt, smallest to largest, and that was really the only thing that I knew how to do. So I'm making all this money. I really wanted to get that $300,000 debt, student loan debt, paid off. So we did that. Paid for some other debts, paid off that first house. That took about 8 years. And I thought, once I became debt free, as Dave always said, the confetti would fall and balloons would drop, and all of that. But I was excited for about a day. And it was like the next day, I was like, okay, I'm going to get up and go back to work. It was just life goes on. And took 2 years later for a wake up call to happen. We were snow skiing out in Beaver Creek, Colorado, and I had an accident where a kid like cut in front of me and I swerved and I fell and I hurt my wrist. Luckily, it wasn't something where I couldn't work, but that was like got me started thinking, what if I can't use my hands as a periodontist? How would I work? How would I provide? Because your disability insurance isn't going to cover you and keep your lifestyle like like you have. And I realized, man, this is financial. It's very risky, and I had to do something about it. So I started really taking a deep dive on what the wealthy people do, and there was it was very eye-opening to say the least, and to see what kind of brainwashing that I'd been had from the financial industry and from what these insurance people and advisors have been teaching us. Because literally, it's kind of like I used to play golf, and literally everything I thought that I had to do in golf, like swing hard and do this and that, it was like the opposite. Nice, easy swing, and this doesn't make sense. But so everything that I had been taught when I was researching these wealthy people it was totally the opposite. Whenever you ask somebody wealthy, what do? They don't say, I'm a lawyer, I'm a dentist, I'm a doctor. They don't do anything. They own. I own this business. I own these properties. So it's so just right there, you start thinking, well, okay, this person has a lot of free time or more free time because he doesn't have to go to the office every day to make money. And that was one of the things that was a huge wake up call for me when I started to do that. And during this process, I read Robert Kiyosaki's Rich Dad Poor Dad. Well, Dave Ramsey always references the Millionaire Next Door book because that's pretty much all of his philosophy is. You live cheap for 30 years and then hopefully you die poor for 10 years. Basically, hey, I'm a millionaire at 70. Okay, whoop-de-doo. What is that going to do for you at 70? I mean, I'd rather do it at 30. But that's again, that's what we've been taught. It takes forever to build wealth because you have to invest in the stock market. And so while you're paying your 1% to your financial advisor, he can travel the world telling you to work. I mean, that was the con that, whether you believe it or not, that's what I believe. And that's what was happening until I got control and I changed my life. And I'm helping other people change their lives too. But first it takes a wake up call. And that was my wake up call. So you can see how kind of all these steps, lead up to the real estate. So other things that I
Before,
found about wealthy
before,
people.
sorry. Oh, yeah, maybe you're answering the question I was going to ask you. I was curious what else you read. You said you did this really deep dive into
Yeah.
what wealthy people do. What
What
are the
was
other things that you studied?
what was funny was so Dave Ramsey always referenced The Millionaire Next Door. That book was published in 1996. It was, a leading seller. It's still a leading seller today. The exact next year, 1997, Rich Dad Poor Dad came out. Again, it sold millions of copies, but just two totally polar opposite books. One of them says you have to work forever. You have to drive a used Toyota. You have to go to the thrift store for clothes. You can never travel hardly. You can never go out to eat. And you got to work for 40 years and congratulations, you'll be a millionaire. Whereas Kiyosaki states that you, as quickly as you can, replace your income, look for cash flowing assets, get your assets to pay for your liabilities. Again, I'd never really been exposed to this because we go from college to dental or medical school, then our residency, and we're just all patient oriented. We get out, we make good money, and it's like we don't know what to do with it. Kind of like a kid going from college to the NFL pros. They don't know. They go from the dorm to 7-figure checks. So it's kind of like that, but we don't get. Most of us don't get 7-figure checks right off the
Mhm.
bat. Um, Wealthy people I learned had multiple income streams. I only had one at that time. And then 90% of them or more had real estate in their portfolio. And I didn't. It was just like, man, I got to take control of my life. So it really helped me narrow my focus on investing in real estate for multiple income streams. And it wasn't to go out and buy the Lambos and all that. It was to if something happened to dad, the family could still operate. As I'm learning all this stuff, back then there wasn't really a whole lot online for specifically for the doctor community. So as I'm learning about all these new terms like cap rate, IRR, uh, preferred return, capital stack, syndication, I learned how to start a blog, and I just started like, okay, well, this would be something somebody should know. This would be a good topic. And I just started doing like an article a week. And then after about like a year, I started doing like 2 articles a week. And then I was like, looked up one day, I was like, man, I've got like 300 articles and I don't really ever read blogs that much. I'm always watching YouTube. I said, well, why not just take those articles and start making YouTube videos? So now I'm doing both. I'm making YouTube videos. So now I'm actually getting into using some AI to help me to do all kinds of stuff with all of that and making Instagram reels and that sort of thing. So I started investing in syndications because, our biggest income tool is our, you know, dentistry or medicine or whatever you went to school for a long time. And once you start getting kind of pulled over to different things, your income can drop. So that allowed me to stay focused on the dentistry, but take my money and invest it to start replacing, my expenses.
When did you start investing in syndications?
That was 2017.
Okay.
Started crowdfunding because crowdfunding was big back then. And I did a couple of deals, little deals like, you know, 2 grand or 5 grand. You could just do like little things. And then I was like, okay, it's time to step it up into one of these um, equity deals. It was 50 grand apartment complex in Tulsa. And back then, it made me realize I didn't know what I was doing because I was just looking at a website going, what's the best looking picture of these apartments? And then you have these numbers, just like IRR and pref and whatever the higher number is, that was how I used to invest. So when I did the $50,000 deal, it went like for months and months and months, and we never got any type of update. And then finally, we get an update, and it said, "Hey, all this whole project is on hold. There's some issues." And come to find out, the sponsor went into a crime-ridden neighborhood, and everybody's moving out of this apartment complex. And he got the bright idea to dump millions of dollars into it, investor dollars and other dollars, hoping they would come back. Well, guess what? They didn't. And we didn't even know all this. So everybody in that deal lost all their money.
Well,
50 grand. I did. I mean, I was a lot of people. This was realtyshares.com. That
yeah.
was the big, and they actually went under. Somebody bought them out. But again, that where you learn from your mistakes, and it taught me that I didn't know what I was doing. And but I knew that I had to stay into it because that's how people build wealth. So I started finding some good quality operators. I started networking with them more.
So how come you were not scared off at this point? Because a lot of people would, after having lost that much money, would just say, okay, that was a bad idea. Like, I remember growing up and talking to my mom about the stock market, right? And my mom was like, oh yeah, I bought some stock once and I lost all my money and I didn't do that again. And and her idea was like, well, the stock market is a bad idea because you'll lose all your money. So why was it that you were able to say, like, take a step back and say, okay, it was this deal was bad, but the whole business isn't bad.
That's an easy answer, but because my why was so strong from getting injured, I had to do this for my family. That was just pushing me. Probably if I was just taking some extra money and just did, I probably would have quit after that.
Hmm.
But when I started investing, when I did finally started investing into some syndications, the first one that I did that actually got paid was one of Joe Fairless's deals, apartment complex, Ashcroft Capital. I remember getting that first check for $333.33. And I was like, man, that just paid for like my cable bill and gas bill, and then I got another $333. Like, man, so I kind of started using it kind of like Dave Ramsey. I started doing like a passive income snowball where it just started replacing my expenses. So now I don't have to go out and pay for that. So one day I was getting ready to invest in an apartment complex in Dallas, and that group said, "Hey, you have this little following of people. If we go through all the legal channels and all that, would you want to come in as like a co-general partner and try to raise funds for the deal?" And I was like, I never heard of that before. It's like, okay. So, they were sending out their deal to their investors, and then they're like, "Hey, here's kind of email kind of that we're going to send out. You can change it up." So I had like 220 investors at that time.
Mm.
So I sent it out the email, and then 48 hours later, I sent out that email, and they told me, "Okay, well, after that, you're everything's closed down. We're good. You raised $2.4 million in 48
Wow.
hours." I was like, "Wait, what?" From an email list, you know? So that I say all of that to get to this point. That's how I got into raising capital.
So you had built, I mean, so what you did without really realizing it was that you built an investor list before you needed an investor list, right? I always tell people always ask me how to raise capital, and I say, well, you got to build an investor list, but you got to build it before you need the capital. But most people who are asking that question have already either got a deal that they want to try to raise for, or they're like trying to become a capital raiser and they want this to happen fast. They didn't put in that, you put in several years of blogging and YouTubing to build an audience of other doctors before
Yeah.
you even ever asked them for money. So, you did it the right way, but you didn't know you did it, right? So it's an
Yeah, and
incredible
knowing what
story.
I know now, I know I would do things a whole lot differently to really shorten that to 6 months or less, just with the technology that we have and groups and networking. But again, I didn't get into it to start a capital raising business. And you can run ads, you can do all kinds of stuff. I've never done any of that. Everything's been organic. It's been free. Um, and I've enjoyed it. Now I have like over 2,200 people in my group. It's still growing just organically. And as you know, the hardest thing is finding good quality sponsors. I mean, there's not almost a day that doesn't go by. I was at dinner the other night, and I was showing my friend, his ER doctor. I was like, "Look at this, message." This guy was like, "Hey, I'm in Austin, Texas, and I got a $20 million apartment building. Can you raise capital for me?" I just get messages like that all the time. And he's like, "Well, how do you respond to it? What do you tell him?" I was like, "I don't. I just don't respond to them because that's not." You need to make sure that if you're, in my opinion, if you're going to be getting into a deal and this person that's pitching you the deal, you really want to know, or are they part of the deal, or what's the group? I'm really involved now. I go to look at the projects. I'm meeting the sponsors, because my reputation's on the line, and that's why I really got out of capital raising and kind of jumping around from other people and doing my own deal with our group because I can control it a lot more. Are we going to mess up and have failures in the future? Yeah. Um, that's just part of life. But it's something that's on me, not on them.
So you raised over $2 million on this first raise, and you didn't even know it. So I'm sure some light bulb went off in your head at that point, right? So tell me what happened. I mean, first of all, tell me how that felt, and then tell me where you went from there.
It was weird. I mean, it was crazy. But the thing is, for the first year and a half, 2 years of raising capital, because I didn't know what I was doing, it was none of that was structured correctly, and I hardly made any money.
Hmm.
And then once I got an SEC attorney, and he started looking at all the stuff, he's like, "Man, you got screwed so bad." I was like, it doesn't surprise me, and again, if they're going to screw me, bringing capital to their deals, what are they going to do to their investors, so but anyway, that's the past. So that's why I've moved forward to do it on my own. And now being so before I joined my partner to do the RV parks, and I got my SEC attorney, he made sure that the compensation that I was getting was, pretty much in line with everybody else. Have him review all the contracts and all that. Before, I was just doing it on my own and was really taken advantage of. So I really, up until like the last 2 years, hadn't really made any money off
Mm.
of this until I got that attorney.
And so tell me about joining the group that you joined. So how did that come about?
It's weird, and it's really all about. It just goes to show you about your network and um your environment, and to change your environment. So once I got out of going to dental meetings all the time to going out to doing real estate meetings and meetings with other entrepreneurs and masterminds, and you're around people that really want success and growth. I just had a guy, it was a dentist, and he said, "Hey, I bought 2 RV parks with this real estate attorney in Tennessee, and we're killing it. Here's the deals. You can look at them; they're cash flowing. I've seen all your content and what you're doing. Would you be interested in maybe teaching us how like to do like a syndication, and then that way, if it works, and then we can grow it." So I involved, I had to talk with them and stuff, and then I involved my SEC attorney, and we got on a call, and he said, "Look, here's all the things you need to do." So he had a deal lined up, and we needed to raise like 800, $900,000, something like that. He said, "All right, here's all the things you need to do." He was talking to uh the other guys, like, "You need to get this online portal, you need to get these documents." I mean, he laid it all out. And after I heard all that was involved, I was like, "Man, it's gonna take him forever to do it." And it took him 2 weeks. He was all in. It took him 2 weeks, and 6 weeks after that, we had closed on that park. But the terms that I came up with, my SEC attorney's like, "Man, they're not offering you, like, hardly anything. I mean, you're not getting." No, I said, "You know what?" I said, "I wanna prove myself." I said, "I really like these guys. I wanna prove myself that I can do it for them and show them that we can be successful. Then after that, we can talk about renegotiating." So that's pretty much what happened. They did it, and actually they came back like 7 months later and said, "Hey, you remember that first deal we did? You didn't really get what you." And I never asked for it. So you didn't really get what you should have got. We're going to give you more equity in that deal. So and that was February of 2023,
Mhm.
and we bought 12 RV parks since then. I
Wow.
mean, yeah,
That's
it's been on a tear.
all around the same size or bigger ones, smaller ones, or
Um, a little bit of mix of everything, anywhere
yeah.
from 1 to $3 or $4 million parks, and
And
mainly in the Sun Belt.
are they, yeah, I was going to ask you where are they concentrated?
Louisiana, Mississippi, Alabama, Florida, Georgia, Oklahoma, getting ready to be North Carolina, Tennessee, and Kentucky.
And so how are you guys managing these? Are you third party management or is this self management?
Well,
What's the
John, my
structure like?
business partner, he's completely built out this huge team and
Mm.
scaled it. So we have an acquisitions team, we have in-house property management. So and I just hired my friend here that's the head of all the land development. So he goes around for the projects, and we're scaling like that.
So you have a whole infrastructure built out.
Yeah, or we're
Yeah.
building it out now. Yeah.
Yeah. I mean, I was gonna say when you told me that story about those guys coming back to you and saying, um, you didn't get enough, we're gonna give you more. I mean, that's a pretty strong indicator that they're good people, right? I mean, unlike some of the other people you dealt with who, screwed you over and the original deal sponsor you invested with as an LP who just didn't know what they were doing. The idea that these guys would come back before you even said anything and said, "Hey, look, we need to treat you better," is a pretty strong signal that,
Yeah. And
yeah.
I could tell in that initial meeting that they were really good people, and that's why I chose to go that route and really, have it so much lower, because I knew that we probably had something there potentially, or I was hoping to at least.
And so what's your plan from here? I mean, you said you're working to phase yourself out of your dental practice and and presumably do real estate full time. I'm guessing what is your what's your timeline for doing that?
Um, it kind of depends on. So right now, because we've only just been doing this for a year, this RV park. So my friend John, my business partner, he's like, hey, I want you full time. But when you have a family and all that and a lifestyle, I want to make sure, I want to go like maybe another year just to
Mm,
make sure everything's sustained. And I don't want to put any pressure on him. So I'd hate to quit my practice, join him, and then things start going not like as we expected it. So I want to get to the point where he's like, man, we definitely have enough to where you could leave and keep your same lifestyle and that sort of thing. So that's it's more of a time aspect like that. But I would go more to the full-time content creation, investor relation. I just went down to a park in South Louisiana that we're acquiring. I was able to shoot some footage on site. And I want to do more of that because that's what our investors want. They want to see what they're getting. They
mm.
want to know what we're looking for in these projects, and they want to know. And I always tell them what I like about them and what I don't like about them, because there's always stuff I don't like about them, and then how we're going to address those things in this project.
And do you find, so you've built this following and built a pretty substantial investor base. Like, are you finding that there's a lot of other doctors and dentists who kind of want to follow in your footsteps and kind of like go down the path that you've gone? Or is it really mostly people who are, they're content to continue practicing medicine and they just want to hand off their money to you? Uh, what are you seeing?
The majority of them want to invest passively, but we had enough people last year ask us, and most of these people were dentists or physicians that already were investing in real estate, like single family homes, other medical buildings, Airbnbs. They wanted to scale, and they wanted to start investing like an RV park. So we actually started a coaching program this year, my business partner and I, where we're basically just teaching them what we do every day.
Mm.
How to find them, how to get financing, if they want to do a partnership or syndication, how to manage them. And everybody that we work with, our whole network, they're involved on these calls too. So that there's not near as many of those types of people because
Mm.
that it's a very, as it's a time commitment. But because we were asked by enough people, I thought it was time to do it, and we did, and they're really enjoying it.
So I'm curious, you said you described how you inadvertently built your investor list just by talking about the things that you were seeing and learning. But you also mentioned that if you were to do things again, knowing what you know now, you'd do them differently. So what would you do now if you were starting all over again, or if you were advising somebody who's just starting out trying to build an investor list? How would you go about doing it now?
Well, I think the most important thing is having a niche, and
Mm,
for me, because I know the pain points of being a dentist, a physician, that really resonates with people. I mean, it's like, pretty much everybody that comes in and I have a call with, they're like, yeah, it seems exactly like you were talking to me, and so if you're an attorney, if you're an electrician, if you're a teacher, whatever you are, I would probably encourage you to go with that audience as your niche, because I mean, you know what it's like. If you're an engineer, you know what it's like to be an engineer. You know the issues that they're going through. So that's number one. Number two is I've had more people say that they have seen me on YouTube and video. So I would start off on YouTube and Instagram. You can do YouTube first and then just get somebody to edit it and cut it up and put it on Instagram. But that, to me, um, then once you do your video on Instagram, there's AI software that you can take you can just take your YouTube URL, your website, you can put it in the software and it can go through the transcript and make a really nice blog out of it.
mm.
And there you go.
And like the videos that you put up, what kind of content do you cover, and like how long are the videos? And how many videos do you do a week? Like, what's your strategy?
I'm pretty much I'm just converting all my articles into videos.
Hmm.
and it's all, it's mainly about financial freedom. It's about real estate. It's about passive income. I do a lot of interviews like this now, and that, I'm getting ready to interview a guy he's known as like the travel guy.
Oh, I know
And
that guy. Yeah, I follow him on LinkedIn or someplace. Yeah,
yeah.
yeah.
So, for business owners that were already spending money, we already have credit cards. Well, he has a way, he has a concierge service to get you the best bang for your buck. So stuff like that interests me, that I think other business owners and practice owners could benefit from. I'm doing those types of interviews too, and that's on YouTube as well. But my main videos, not the interviews, or minimum 10 minutes, because you want, with the watch time on YouTube, you want them at least 10 minutes, because they only may watch it for 3 minutes or 4 minutes. But if you do a 2-minute video and only watch it for a fourth of the time, it's like 30 seconds.
And
So
what do you do for like graphics, covers, things like that do you have somebody who designs that for you or design all that stuff yourself?
for YouTube,
Yeah.
yeah, I use a service that they do all the thumbnails. And I mean, once I read the book, Who Not How,
Yeah. That's a
the
great
that
book.
that changed that actually got me to start my YouTube channel, because I was just asking, how do I edit it? How do I do thumbnails? How do I upload it? And I found a who that does it for me.
Yeah. It's a huge, I mean, I've been doing that too, because I recently read that book and it's pretty, it's pretty eye-opening. I mean, that little section in the book where they talk about how the reason people don't get started on stuff is because they get hung up on like, how am I going to do this? Or like how overwhelming it is to do this, and they just give up. And if you just go find somebody to do it instead, then it's like, oh, it's done. Now
Hmm.
it's getting done.
Yeah,
It's pretty remarkable. So
yeah. It's
I
just it's just a different type of mindset you change, and that's probably, out of everything that I've learned, that's the difference between average people and really successful people, is just their mindset, how they think. That's it.
yeah.
Not
I
not
mean,
they're not any smarter,
the
you know.
basis of entrepreneurship, which it took me a long time to figure out, is essentially like getting other people to do stuff for you. I mean, it literally is if you think about it. Like it's not, you could be like a freelancer or solopreneur and you're doing everything. But the difference between that and an entrepreneur is an entrepreneur figures out how to build a structure and build a team and build a system so things are getting done and not doing all the stuff yourself. And I think what's great about Who Not How is it just kind of unlocks the mindset about how to do that, like to be thinking in that way. Because I think even before I read that book, I kind of knew on some level, like, yeah, that's the direction I need to be going. I need to hire people, but it was not like I just sort of didn't make the connection right strongly until I read that book, and then suddenly it just seemed clear as day. Like, oh yeah, I just got to go out and just find people. That's all. It
Mhm.
seems pretty easy. So, well, we're actually out of time, but this has been really fun. If you have any final thoughts that anything that we didn't cover yet that you think the audience ought to know.
If you want to, if you have like any specific topics or questions you want me to do an article or video on, you can just drop me a note. You can go to my website, debtfreedoctor.com. All my YouTube channel, Instagram channel. I'm pretty active on Instagram, so you can just DM me on Instagram at Dr. Jeff Anzalone. But again, all the links are on my website, debtfreedoctor.com. And yeah, happy to. That's how I really come up with a lot of my content, is just from what people are asking or what they're wanting me to cover.
So I encourage you to go to Dr. Anzalone's website, go check it out, Debt Free Doctor, ask him a question, get him to make you a video, and help him come up with ideas for his content. Well, listen, this has been really terrific. I'm really happy that we had a chance to meet today, and good luck. And I hope to have you back someday with a progress report on your
Yeah,
freeing yourself.
once I exit
Yeah,
practice,
yeah,
we'll have
exactly.
another one. How about that?
We'll do a follow-up on that, and you can
Yeah,
tell me how it went. So, but good luck with everything, and thanks for being on the show today.
absolutely. Thanks for having me.